FN program is a full doc program that allows the borrower to get the best possible, foreign national borrowers to get the best possible rates and the highest possible LTV. Effectively, the 5,000 FN program is considered a full documentation loan. The important element to consider is that the borrower on the 5,000 FN has to provide income documentation from country of origin. And depending on the country, that differs. So if the country, for example, has a one-page tax return for the year, that's what we take. If they have no tax returns, all we can get is a CPA letter or accountant or attorney or whoever they use, that's all we will get. So it all depends on what that country's requirements are for tax reporting, if they have any. If they don't have any, then all you have is a third, again, it's supposed to be a third party. And again, if it's a country that doesn't have any tax reporting, they really don't have CPAs, right? Because what's a CPA going to do if they don't have any tax filing? So we make it work based on the specifics of the country, but that third-party independent letter is critical in verifying what the country requires, because we don't know. We don't know what each country requires. We're going to depend on the third party in that country to write the letter indicating what the borrower's income is in US dollars for the last 2 years. So you're basically looking at a hybrid full doc loan. Now, there is no 4506 because depending on the country, there's no such thing as IRS. So we cannot verify it. We basically go off of what's given to us, the income documentation for W-2 borrowers, if there's such a thing as W-2 borrowers in other countries. For not self-employed borrowers, we require pay stubs just like we would on a regular full doc loan with year-to-date income. We usually use a currency conversion software, simple. You can get that online where you can plug in whatever the currency type is and convert it to US dollars, and we put that in our file. We require international credit reports for every international borrower. We have a specific company that we use currently out of Florida. However, it's important to understand on all foreign national borrowers, besides the international credit report, we will require trade line details. Now, you may ask, what do you mean you have an international credit report and you want trade line details? So let me elaborate. The international credit report that we obtain is a one-page summary about the borrower. It doesn't provide details of each trade line for the borrower. It just provides effectively the summary page that you would see on a credit report. That's all we get. We require a minimum of 3 trade line details. So the 3 trade line details has to be met in one of 2 ways. In countries that have, like credit bureaus like us, like Equifax and Experian, and the best one that I can give you an example is the UK. Borrowers themselves can actually go and run their own TransUnion or Equifax. I don't think they have Experian. So besides the international credit report, we need those details on the trade lines that our international credit report doesn't provide. So for UK borrowers, the order is put in for an international credit report, but separately, the borrower obtains their own credit report detail, like you can go today to Experian or whatever and get your own credit report, and we attach that behind the international credit report to meet the trade line requirements. If that's not available, depending on the country, then you need 3 trade line letters from creditors, and one of them has to be a financial institution. So that letter has to have minimum 2-year history. It's basically a reference letter that's put behind the international credit report that tells us that this borrower has 3 trade lines with ABC company, XYZ company, and Z company, and provides a letter that just explains that they've had minimum 2 years credit and they've been in good standing, what the high balance is, blah, 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 the kind of stuff you'd see on a trade line report in a letter. So we do need those 3 trade lines because many people think because we ordered the international credit report, those 3 trade lines are not required, and that's not correct. Now, you may ask, why doesn't the international credit report that costs $250 not have those trade lines? Very simple. At least what I've been told is that most of the countries have privacy laws whereby the trade line details are not legally allowed to be provided. So the company that does the international credit report, and they're based out of Florida, will give us everything about the borrower, but they will not give us the trade lines. There are cases where we do get trade line details on their primary residence and their mortgage. So that international credit report is very thorough in that respect. So it provides us residence information, mortgages. So for a borrower that owns multiple properties, we see in like the UK, a borrower that owns 2, 3, 4 properties, those details are provided on the 1-page summary. It actually says where they live, what their taxes are, what their mortgage is, blah, blah, blah. So that's a nice feature we've seen for UK borrowers that own real estate. But depending on the country, that may not be available. But I want to bring that to your attention because I don't want you to think that by getting the international credit report, the trade line requirements are met. There needs to be trade line details that, again, are generally not on the international credit report. Okay?
One of them has to be from a financial institution.
Correct. So you can't have 3 utility companies, car loan, exactly, a bank, some sort of a bank. So that's important to understand, and that applies to Program 5000 FN and 5000 INV FN. So foreign national borrowers have to meet what I just explained from a credit report standpoint and trade line standpoint, documented in our file. And there we have standard specialized forms and credit card order forms that can be completed where that gets ordered and it's sent directly to Greenbox. So the broker orders that through the third party, and that report is put in Greenbox's name and is sent to us. That's very important to understand from a credit standpoint. The 5000 FN program allows the borrower to do an investment property purchase at 65 LTV and a second home at 70 LTV, while the 5000 INV only works for an investment property. Very simple, very straightforward. That's the big difference between the two. Obviously, the pricing on the 5000 FN full doc is better than the 5000 INV FN program because the 5000 INV program is effectively as close to a no document loan as possible. While this is full documentation, this 5000 FN is full doc to the extent of the country's rules and regulations for tax filing. So it's classified as a full documentation loan. Those are some important items to know about the 5000 FN program. In addition to that, it's important to understand the difference between the 2 programs. We do have, under the 5000 FN program, we do have 12 months reserve requirements. So that's important to understand. And what happens is that the borrower is qualifying with DTI calculations just like a regular full doc loan. So we take, on the 5000 FN program, we take their liabilities from the international credit report and we actually manually input that, their housing expense at the country of origin, any other liabilities we see on the international credit report, their income, and we actually qualify the borrower just like a full doc loan. They actually have to meet DTI requirements. So if they're buying a second home here and you add that mortgage and then you add the mortgage from the country of origin and they got other liabilities and the income doesn't support it, they could actually get declined. Believe it or not, that's something to be aware of. I haven't seen too many loans like that, but that does and could happen. They actually have to meet DTI requirements just like a regular full doc loan on program 5000 FN. Now, I would like you to turn to page 3 of 8 on Program 5000 FN, and we need to understand the asset requirements. So the rules for assets for down payment down payment, closing costs, and so on and so forth are very important to consider. The borrower needs to have those funds transferred to a U.S. account. Under this program, as you will read right in the center of the page, the down payment, closing costs, and reserves must be verified with a VOD or a bank statement as deposited in a U.S. bank prior to closing. Seasoning of funds are not required. So they have to transfer the money from the country of origin to their a U.S. bank account that has to exist. We do not allow a borrower not to have a U.S. bank account. It is a mandatory requirement. Not only is it a mandatory requirement for qualification, all foreign national borrowers have to complete, as part of underwriting, an auto-debit ACH form where payments are automatically withdrawn out of a U.S. bank account.
So how do you get overseas account when you have that, say, you're in Visa, you want to wire the money, so you have to come in to the U.S.?
Those borrowers have to have a U.S. bank account, correct. We do not allow for a foreign national borrower to close a loan without having a U.S. bank account. We cannot do an auto-debit ACH out of a bank in Vietnam or wherever else, China. No, you can actually open an account without a Social Security number for a foreign national borrower. There's some specific requirements, and that's typically done with an ITIN number. You can get an ITIN number and a passport. You can open up an account in the U.S. So borrowers do have that. We also do require some sort of a visa for them to be able to come to the U.S. Now, a lot of countries have waivers depending on what your country is, right? There are waivers for example, UK borrowers. They don't need to have a specific visa. There are visa waivers. Depending on the country of origin, there are waivers and sort of a streamlined visa process. And the reason is very simple. How does a borrower that intends to, let's assume that they claim this is a second home, intend to use it as a second home if they can't even get into the country? How's that for a funny question, right? But even as an investment property, the idea is the borrower, even as a tourist, should have the ability to visit their property, their investment, right? We want to make sure that the borrower can basically have access to their property. So they have to have some sort of access, some sort of a visa in order to get into the country, or be from a country that allows for a waiver, one or the other. That's extremely critical. Now, we do not lend to countries that are on the OFAC list. For example, if you are in Iran, you can't get a loan here. That's not going to happen. Okay? So depending on the country of origin, you may not be eligible. Venezuela, you're not eligible to get a loan here.
Where do we get that list?
You can actually Google OFAC watch list, and it'll have all the countries that are on the OFAC. It's in the guidelines. Yeah, call the FBI for a list. So depending on the country, for example, we cannot do loans in many of the countries that are on that list. Not many of them, all of them. If they're on the list, it's not doable. The loan is not closable, period, end of story. Okay? So these are some things to be aware of for foreign national borrowers as a whole. Again, the 5000 FN requires more documentation, more reserves. The credit requirements are identical with the two foreign national programs, but the income documentation, DTI, reserves, in fact, if you look at the section above what I was reading, it will tell you that there's additional reserve requirements for additional properties that the borrower owns. So we're looking for a borrower that's going to have higher reserves, higher assets to get better pricing. So that's something critical to be aware of. Now, for UK borrowers, there are some exemptions that we have built into our guidelines. The UK borrowers, and we do a ton of UK borrower loans, and that's why exceptions and exemption in the guideline is made out for UK borrowers, and we do a lot of that in Florida, coincidentally. For UK borrowers, we allow certain things that we would not allow for other countries. We allow a UK borrower to have a US bank account, but not have to put the money into the account. Most of the UK borrowers use one of many foreign exchange companies, and we've actually listed them as being allowed, where they actually do the conversion of the currency and wire the funds straight to the closing agent. That's only for UK borrowers. So we have certain flexibility in our guidelines for UK borrowers that are not available for any other country. There are also some exceptions for Canada, but we haven't put that into our guidelines because we haven't done a lot of Canadian loans. I'm guessing, and just by the fact of Canada, I can tell you that probably what applies to UK borrowers will easily apply to Canadian borrowers. So the level of flexibility is going to be for Canadians and UK both. We just haven't added that into our guidelines just because we haven't come across a lot of Canadian loans. That's extremely important to be aware of. I'm sorry? UK borrowers. We've done a lot of UK loans because we have a lot of different groups that are actually UK brokers that do loans for folks from the UK. It's just we just happen to have that. I think you may know of one of them. So that's extremely important. You can read on page 4 of 8 with regards to the different types of visas that are available. Something important that you should be aware of is that you'll find that most companies that do loans for foreign national borrowers require the borrowers to sign at the embassy, U.S. embassy in their country. We've overcome that challenge because what ends up happening is that to get an appointment at the embassy, sometimes it's 4 weeks out, 5 weeks out. Well, that creates a problem. So, again, being a true non-QM and focused on doing foreign national loans, we've investigated and added into our guidelines that as long as a country is part of what they call a Hague Convention country. Now, you may say, what are you talking about? Hague, there was an actual Hague Convention that took place, and a whole bunch of countries participated, where they signed an agreement to acknowledge, reciprocate effectively those kinds of legal aspects of notaries. So as long as the countries are part of the Hague Convention countries, we will accept non-embassy notaries. But what goes with that is that, like, for example, again, back to the UK example. So in the UK, we've done a lot of loans where loans have gone out to notaries. And coincidentally, in the UK, these notaries in the UK, most of the time, they're actually attorneys in the country. They're actually attorneys. But what happens is that the notary signs, and then it's got to go to what they call an apostille, not an apostle, because I originally thought, wow, how religious. It's got to go to an apostle, right? They call it apostille. Apostille is someone who certifies the notary. So the documents get notarized by non-embassy notary, and then it goes to an apostille that puts a stamp letter on it that verifies the notary. It's sort of a double verification, and the docs can be sent back, and we close based on that. So again, that flexibility is something we built because we encountered foreign national borrowers that were taking way too long and had to go way too far to get to the embassy, and their deal was going to get canceled if they couldn't sign docs right away. And that's one of the things that we built in as a common sense, true foreign national lender that a lot of lenders don't allow. Now, the mom and pop type of lender doesn't know this kind of stuff. They don't understand this, and they just think, embassy. We went above and beyond because we encountered real-life practical issues with that, and we built flexibilities around that. So that's something to be aware of, and that applies to both 5000 FN and the 5000 INV FN, and it depends on the country and that process. Again, to determine the if that country is eligible, is very simple. If you go on Google and put Hague, H-A-G-U-E, convention countries, you'll get to a link that'll give you the list of countries that can have notaries outside of the embassy and an apostille. You like that? So with that being said, let me address credit issues. If you turn to page 5 of 8 on 5000 FN, you will also find that beyond the fact that the borrower needs to get an international credit report, there have been borrowers that actually have U.S. credit. And if they do have U.S. credit, they need to have a minimum of, on program 5000 FN, they need to have a minimum 620 FICO score, believe it or not. We've encountered cases where, and the file, automatically through the file setup, they'll run the credit. 99% of the time it's blank, right? With the ITIN number, they'll actually run our U.S. credit just to make sure there's nothing on it. We've had cases for foreign national borrowers where they've come and gone out of the U.S. and they've owned property, and for example, in a case, they have a collection account. And you may wonder, how do you get a collection account? Very simple. Confusion with cable, right? Cable TV. So we run a credit report. They got a, 2 scores are 0 and one of them is 570 because they have a collection account for $300 and that's all they have. That's an exception. That's a problem. Because if we do have a score, we default to the U.S. score minimum. That's important to understand with 5000 FN and 5000 INV FN. It's important to understand that. And file setup will automatically run the U.S. credit report using the ITIN, and even if it's a 0, they put it in the file to verify the borrower doesn't have any FICO scores.
They don't have a FICO score. What are we going to start to qualify them on the starting rate?
We don't expect, on foreign national, the pricing has nothing to do with FICO score. Okay. It's just a minimum to qualify if they have a score. Okay. So they get disqualified if they come back generally with a 570 score, unless there's an exception, there's a problem, something will have to happen. That loan has to be addressed as an exception on the FICO score. It's on the rate sheet. You look at the rate sheet, you'll see that you don't have to worry about pricing it on the based on the FICO score. The credit is self-explanatory again on 5000 FN, 0 times 30 in the last 24 months. And we've had cases, believe it or not, where the borrower in another country on an international credit report has mortgage rates. 13 to 24 months. I don't see it very often, but it's happened, and not because the borrower is delinquent. It's a reporting issue, and it becomes a problem. It's happened. We have one active right now. I actually try to accommodate them by giving them the exception, and they have to lower the LTV. So there are cases where we do need to deal with that. Any questions on anything I need to explain? The income section is, as I said, it's very similar to a regular full doc loan. Imagine you have an agency full doc loan. We're going to require the same income docs. So like I said, on the 5000 NP program, we need P&L. Well, guess what? We need a P&L on the 5000 FN if the borrower is self-employed.